Hello and welcome to the trade setup. In this video we are looking at Tesla. It is time for another update, and today we focus specifically on this diagonal pattern we have been tracking ever since we actually started covering Tesla, where we had a very undeniably clear initial three-wave move to the upside in a wave 1, and we have been looking for this to develop as a diagonal structure ever since. And we had on the chart, on the larger time frame, a couple of interpretations, but ultimately, this can only unfold as a diagonal structure. This cannot be a wave 3, part of a larger impulse, and this could be unfolding either as an ending diagonal in a wave 5 or a wave C, we have even that option, or it could unfold as a leading diagonal within a wave 1. Now, in this movement, we have already provided the ideal targets we have for this structure, and the wave 3 is expected to reach at least $620, that is the 138.2% extension of the wave 1, and typically this is where we would like to get to be able to track with some degree of reliability a follow-up wave 4 correction. And then we can provide an ideal target even for the internal wave C to the upside, as we have the wave A and the wave B in place, and that would be the 100% extension of the wave A, which sits at $760. Now, keep in mind, it doesn't need to absolutely get there, but if this is to continue within our expected structure, this would be a strong preference for us. Now, in this wave C, we are of course looking to build a 5-wave pattern, and so far we have gotten away with tracking this as a potential impulse even, as we had here a 1, 2, and we were looking for a wave 3 to the upside, and so far we have held every single relevant level of support to allow such an expectation to go on. And even more recently, this week actually, we have pushed briefly below the last level of support, below 50% retracement, but it wasn't a sustained break, which still allows us to look for continuation to higher prices here within a wave 5. Now, there are some issues with what just happened with that last drop, but we will discuss about those in a moment. But for context, here within this as a larger wave 3 to the upside, we would have this series of 1-2 setups, where this 1-2 setup would not be relevant anymore, as the internal wave 3 in this area would be expected to already be complete, and we would be looking for this 1-2 setup to still be followed by the wave 3, which is complete. Then we would have here a wave 4 and a wave 5 to take us to higher prices before beginning an even larger correction. And to be clear, if we fail to hold here the $386 level in a sustained manner, that would have actually quite bearish implications and would heavily damage the reliability of this pattern we can track within this wave C to the upside. Already, this initial wave 1 wasn't going to be the prettiest or the greatest one. It needs to be assuming some distortions than what we would typically expect, at least in terms of the look of the structure. But we need to complete an impulse within this wave 3 to still be able to track an overall impulse within the wave C to the upside, and for that we need to hold here the 50% retracement and form one more high. And if that doesn't happen, which might become a reality soon enough, we need to start considering some other options. So overall, I would still be looking for this wave C to be building a 5-wave structure. If we fail to build it within an impulse, we would need to track it within a different structure, something like a diagonal pattern. And that would lead us to actually look for a potential 1-2 setup for this entire pattern to the upside, because I can track this as an ABC structure. This could be an A wave up, a B wave within a triangle, and we can even notice it very, very clearly here in an A, B, C, D, E, and then a wave C in this structure that would allow a completion within a 3-wave structure. But that is not what we are expecting of a wave C, which would force us to look for a larger 1-2 setup, which, while technically it could work out, I would find that an extremely low quality structure, as the proportions would be even suggesting that we should prefer actually a failure, because we would have extended already very much within a wave 1. And what can we really even expect for this to be a wave 3 that would take us even beyond $1,000 itself, and then a wave 4 and a wave 5? Well, technically it can work out, but more realistically, we would need to assume that perhaps this has formed a different type of pattern. Perhaps we will not get this wave 3 to the upside at all, and we will get a failure, as we haven't yet gotten to the ideal target of this as a wave 3, even if I want to actually force this as a successful 5-wave pattern. Yeah, something like a 1, 2, 3, 4, and 5 doesn't look too good. Sure, we could maybe allow it to work, but then we wouldn't have reached the ideal target, right? The $620 level wouldn't have been achieved, we wouldn't be able to reliably track a wave 4 correction, and we would need to be prepared for potentially a quite catastrophic failure for this chart. Now, I'm not predicting this, I'm watching for evidence. I will continue to look for potential opportunities, but as of right now, below $386 we see major risk. Now, if you so far enjoyed this video, leaving a like would be greatly appreciated. If you want to keep up to date with our analysis on Tesla and many other assets, yeah, we provide multiple videos every single day. Subscribing might not be a bad idea. And if you want to support us directly, you can check out our channel membership, and as a thank you for any of these actions, I would like to invite you to our channel newsletter, where you get access to our monthly top picks, where we identify for you high quality structures. And talking of high quality structures, it's not necessarily the case that this is the highest quality structure, but from a risk-reward ratio perspective, this is actually incredibly interesting in my opinion. And in the previous video, we already highlighted that we are very much in the deep end of the area of support. We would be looking at a possible extension within this wave 5 to, who knows, maybe $520, $550, whereas in terms of risk, we are looking for the break of $382. Yeah, if we get a reset here of this wave 4, we would be looking at a quite clear indication for a failure of this structure to extend higher prices. So this can actually be quite interesting, and I'm not telling you to act, I'm just pointing out some interesting aspects of these structures that I find here. Now, the issue here sits that within the structure in the previous video, we had this previous low. We had already touched the 50% retracement, and the brief break beyond that is not really an issue, but rather the structure that has formed with this brief break beyond the previous swing low we had in the previous video. Because in here, we have now generated a 5-wave move to the downside, and probably something like this, a 1, 2, 3, 4, and a 5. And we have been tracking an ending diagonal within this as a wave C, having a potential 5-wave structure within this area, which previously was not really the case, is telling us of the possibility to have in this yellow structure the wave 3 bottom here instead in a larger A, B, C pattern, whereas we would be looking for a wave 4 still and a wave 5 to take us to even lower prices. So this is actually a quite great warning sign that we would be able, or we would be even suggested by the chart, that this structure would be expected to extend to even lower prices. That is why the probabilities aren't necessarily in the favor of a successful extension in a wave 5 in the white structure. Yeah, we have even pushed here in a 3-wave pattern, but rather in the favor of another low, breaking the area of support we are tracking for the white interpretation, strongly suggesting that this overall structure is going to fail and a different pattern, a different count would need to be tracked. Now, we do not really recommend to be trading a count. Yeah, we aren't looking to trade here a wave 4 into a wave 5 to lower prices, even though that might be considered a more likely outcome based on the structure, based on the count we can have in this structure, it is still against the larger trend, and we are always looking to trade instead the levels, yeah? The support zone we have, for example, in the white structure that can still generate the wave 5 to the upside. Now, again, for a recap, the count is suggesting that we would expect to see one more low before this overall wave C in yellow would be complete, yeah? We do not have anymore a clearly full count within this structure. However, the larger time frame and the white structure is strongly suggesting to us that we would still be able to extend in a wave 5 to the upside, as the area of support is in fact still holding. Now, for a signal that this structure would succeed in having a breakout, I would need to see at least the 61.8% retracement broken, yeah? $442 is our last level of resistance, and with a break beyond that, we would start to lean more favorably towards the white interpretation. However, so far we only have what I would consider to be a three-wave pattern into the 50% retracement in what could be potentially a top within a wave 4 in this structure, yeah? In terms of proportions, it is quite similar with what we had in a wave 2. I wouldn't consider it an issue that it would be too short for this structure to extend lower, with this being a wave 4. And even then, other types of extensions to lower prices are possible. Do not assume that simply because we can track this as a wave C to the downside and a wave 5 could complete the structure here regardless, it will, and that something more bearish wouldn't be actually forming within this movement to the downside. Now, in terms of support, I would still be tracking the same area as if this was to be a 5-wave move to the upside. I just don't trust it to be one. I wouldn't be looking at this as a high probability structure, but I would be watching here the levels between $402.7 down to $388.7. As long as we do not break here the 78.6% retracement, we do not get another strong indication that we would get a failure. And even beyond that, I'm still watching here the 50% retracement line, where we also have this structural support, and even beyond that we have formed previous lows multiple times in this region really, and we can still look for a reversal within this area, possibly within a reset of a corrective pattern that would still lead to lower prices, possibly within a breakout. I am not here to predict whether we will get a breakout or not. I'm just pointing out that we are very deep within the area of support, and the risk-reward ratios are extremely favorable, and that paired with the overall position in the large area of support allows me to actually look for a potential trade setup still on this chart. Now, for a recap, once again, below the 50% retracement, another break would be already a quite strong signal of a failure. If we get a break of the current wave 4 swing low in white, I would be strongly prepared for the overall failure of the white structure. And with a break above $424, we can start to look for potentially more bullish interpretations, yeah? Then a break above this swing high at $436.5 would also be very helpful. But for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoy our content and want to support us directly, check out our channel membership. And other than that, let me know what else you would like me to cover, and I'll do my best to do that in the days next ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.